Well, I mean, you understand how things work here, especially when you have an election. We're already in July, and to have a budget to be implemented from August to the end of the year becomes very difficult because it's something that you're supposed to do over the year period. So you're going to roll this budget over once again. You're going to go through another budgeting process next year. I mean, by now, you should probably, by August, September, you should be submitting the medium-term economic framework for a new budget already for next year. So the consequences of this budget, I think, it's things that we're seeing and it's impacting the economy. Don't forget that growth, the growth trajectory has actually stalled in terms of the economic recovery from how it closed last year to the first quarter of this year. And without the capital expenditure providing the stimulus, our growth perspectives are very limited. And I think that the consequences are reflecting now on the numbers.
Well, really, we're just taking a look even at those figures. You have capital spending accounting for just 31.5% of the total budget. I ask myself, even if the funds are readily available, how much can that really achieve? How much can that really impact the economy?
Well, we also have to look at it, what if we're not spending that money. So when you're in a when you're coming out of a recession and the economic recovery is very fragile, every little bit counts, especially from the government side, because the multiply effect of the government spending within the economy, I think, will have significant impact, without a doubt. So it's important that every single capital expenditure, you find out that the corporates are very shy on investments now. Foreign direct investments are at an all-time low. The corporates, even that are within Nigeria, are stalling on the expansion plans.
Back of the pre-election season?
Yes, of course. So now you find out that we're now going into a situation whereby people are treading very carefully because of the elections. So people are putting things on hold to ride the election cycle and now to begin to see the plan for the next 4 years, how that will unveil. So we're going into a stage whereby people are slowing down. They're consolidating on their plans, consolidating on their profits, consolidating on everything that they have, and to be able to see how they can ride the election process and, wait for new policies, because there's a lot of uncertainty about outcome at this time of the year. And that's why Moody's, I think, is going with that sort of projections, because the economy is going to take a backseat shortly.
Tilewa, just going back on what you said every little bit counts. Now, taking a look at the breakdown of our budget, do you think that budget really took that into consideration? Do you really think the budget really took into consideration the ERGP? But let me put it this way. Do you think our budget over the years has really reflected, has really been designed to impact the economy positively? There are those who say, of course, what we spend in terms of, running the country isn't enough. But then, do you think our budget even puts economic growth into consideration, looking at the numbers and the breakdown so far?
Well, 30% of the budget, another challenge is the fact that there's a deficit that we also need to finance, which is close to 2 trillion out of the 9 trillion budget. So you have a 9 trillion budget and you have a 2 trillion deficit. So we also are beginning to have challenges with the deficit financing. If you're not able to finance the deficit to fund the budget, then you also have other challenges. And if you take a look at the problems we're having with the legislative arm of government and their so-called constituency pork barrel type projects, then the impact of that also is quite distracting, because you can't concentrate the capital projects into your priority projects, which is really what you need to do. Issues in power infrastructure, the road infrastructure, the rail infrastructure, those are priority projects. And if those projects are not getting priority, then the infrastructure deficit will also continue to impact negatively on economic growth. And right now, we're having a situation whereby our economy, as you know, is not growing as fast as our population rate of 3%. And if you're looking at 1.9% growth, it's not a surprise that the poverty, we're now #1 on the global poverty index, which is a big shame.
So what do you think is going to be a priority for the government at this point in time? Settling debts, or really, of course, implementing the capital projects that it ought to do this year? Why I talk about this is the fact that we're talking about the fact that we have debt, of course, taking a huge chunk of the budget. The government also intends to borrow as well, again, to fund the 2018 budget. We're going to see this continue I kind of see a repetition, you know, happening in 2019. How do you see, how do you think the government really prioritizes the whole thing?
Well, first of all, you have to keep the government running. That's the recurrent side of your budget, which is easily 70–75% of your budget. So basically, you're spending 75% of your budget to keep the government running, and you have no choice. You need to do that. So that's going to be your priority. So what you have left in terms of what selective capital projects you can do is now the challenge, and that's why it's important. A new infrastructure fund has been set up with about $500 million, which has been given to the Sovereign Wealth Fund to manage, to try to focus on priority in that area. But, you know, the selectiveness of your capital projects, I think, really are the challenge to fund that. And, of course, to be able to maintain your debt burden. Because by next year, for instance, you're going to get to a threshold whereby your debt levels will no longer be sustainable. And, of course, there's a law that caps your borrowing.